Alright guys, welcome to my YouTube channel. So in this video I'll show you exactly how I trade in this market today, market condition, and how I will trade tomorrow. So what is my entry and exit point will be, and what is my direction. So before I start, if you are new, please like and subscribe. So every day I'm analyzing the market and I'm showing exactly how we trade in this market. So before I start, let me show you the global market. So first, the global market indices. So global market indices, most of the, not most of the, all are negative. All right. So we are expecting that price may gap down tomorrow. If price stay like that, European negative, Asian market negative, and American also negative. So it's a probability to open a gap down. If price open a gap down, so definitely we will go for downside. So it may call sell or it may put buy. So basically it depends on wicks. When wicks is more than 17, we are looking for sell, like it may call sell, it may put sell. So basically I'll show you exactly which strike price we need to select. All right, so today we have seen a wicks is high, so that is why we'll go for call sell if price gap down below 15,400 somewhere there, because there are strong supporting lines. So it's a multiple rejection, and the rejection is act as a support in a small time frame. This is 15 minutes, and the price open a gap down. So we'll sell a call and we maintain 20 to 30 point below stop loss. It depends on your position sizing and risk management. So basically I take like 25 to 30 point, not more than. Okay, so today I trade short strangle. Okay, why? Because price open exactly middle of this range. That was our range, and the middle of this range, and finally price drop here. So we place short strangle above here and here, and we collect the premium. Why we sold? Because VIX was high, and tomorrow if price open gap up like that, so most probability price will be gap down, and it will continue toward 15,200. That will be my target. So why I'm not going to deploy short strangle? Because price are just below this supporting line. If price open a gap down in middle of this range, so I'll use short strangle again. It should depend on market, where market will open. Okay, if market open somewhere, that will be naked sell by following 20 to 30 point SL. That will be naked call, and my target will be somewhere around 15,200. Or if price open gap up above this level, that is 15,400, I'll go for put sell. That will be naked, and I'll follow 20 to 30 point below stop loss. All right, so I hope you enjoyed this video. If you follow continuously, so definitely we'll learn that how exactly we trade in options. So thanks for giving your valuable time.